$16. That is the amount Rajesh handed over at a Western Union counter in Edison, New Jersey. A 58-year-old Indian man, a green card holder since 2014, puts in 12-hour shifts running a Dunkin' Donuts franchise every single month for 9 years, wiring money back home to his elderly mother in Lucknow and his younger brother's family in Kanpur. $2,800 like clockwork, the 15th of every month. 9 years, not a single month skipped until March 2026 when he missed one. Not because he forgot, but because he could not because his bank account had been frozen. A hold placed by Bank of America. Reason listed suspicious activity review pending federal inquiry. 48 hours later, 2 agents from Homeland Security Investigations were parked in the lot of his Dunkin' Donuts location in Woodbridge. They carried a manila folder containing 73 pages, every single Western Union receipt, every bank statement, his last 4 tax filings. Total transfers identified, $291,000 across 9 years. They reviewed his W-2 annual salary, $44,800. They reviewed the transfer total. They asked one question. Mr. Sharma, how does a man earning $44,000 wire $291,000 out of the country? He had a perfectly lawful answer. He co-owns the franchise alongside his wife. She earns separately. He receives rental income from a small property in Queens. All of it declared on his taxes. All of it legitimate. But that did not matter. The investigation was already underway. The SAR had already been submitted. His name was already entered into the FinCEN database. And under the IRS ICE data sharing agreement signed in April 2025, his tax return, the very document that proved his innocence, was the same document that placed him on their radar in the first place. Rajesh is okay today. He was cleared after 11 weeks and $9,000 in legal fees. But 11 weeks of frozen accounts meant he could not pay his suppliers, could not handle payroll, could not send his mother her monthly funds. His 79-year-old diabetic mother in Lucknow went 67 days without receiving funds from her son, for the first time in nearly a decade. This is what the system does in 2026. Not to criminals, not to drug traffickers, but to ordinary Indian uncles operating Dunkin' Donuts franchises and wiring money to their mothers. And the terrifying part, Rajesh did nothing wrong. He never structured. He never concealed income. He filed every tax return on schedule. He still got investigated because the rules have shifted and nobody told him. Today, I am Timothy, and this is Golden Rights. I am going to walk you through everything Rajesh did not know. 5 rules, 5 traps, 5 protections. By the end of this video, you will understand exactly how the United States government tracks every dollar you send home, and exactly what you must do so that you never become the next Rajesh. Let us begin. Let me start with the figure everyone has heard, but almost nobody understands correctly, $10,000. Here is the law. Under the Bank Secrecy Act of 1970, every financial institution in the United States, every bank, every credit union, every check cashing store, every Western Union, every MoneyGram, every Hawala agent is required by federal law to submit a currency transaction report called a CTR with the Financial Crimes Enforcement Network, which is FinCEN, a division of the United States Treasury. This CTR must be submitted whenever a customer conducts a cash transaction of $10,000 or more in a single business day. It does not matter whether you are depositing, withdrawing, exchanging, or transferring. If the total in one day reaches $10,000, a report is automatically generated and sent to FinCEN. Now, here's what most people get wrong. They think, okay, I will just send $9,999 and I am safe. That is not safe. That is a federal offense. It is called structuring, and it is codified under Title 31 United States Code, Section 5324. The law states, and I am reading the actual statute, no person shall, for the purpose of evading the reporting requirement structure or assist in structuring any transaction with one or more domestic financial institutions. The penalty, up to 5 years in federal prison, up to $250,000 in fines for individuals. For corporations, the fine climbs to $500,000. Let me share a real case. In 2005, a man named Hasmukh Gandhi in Pleasant Hill, Texas, a convenience store owner, was sentenced to 2 years in federal prison for structuring. He made several cash deposits, each one just under $10,000. The bank spotted the pattern, filed a report. IRS Criminal Investigation Division opened a case. He went to prison. The lesson is simple. Do not try to outsmart this system by splitting your money into smaller amounts. The algorithm is built to detect exactly that behavior. Banks are trained to spot it. And if a bank suspects you are structuring, even if your individual transactions are below 10,000, they will submit a suspicious activity report, a SAR, and that SAR goes directly to FinCEN. Now, here is where it becomes much worse for immigrants specifically. On November 28, 2025, FinCEN released a brand new alert, and I have the document right here titled Alert on Cross-Border Funds Transfers Involving Illegal Aliens. In this alert, FinCEN told every money service business in America, that means every Western Union, MoneyGram, Remitly agent, check casher, Hawala operator, that they must submit a suspicious activity report for any transaction involving at least $2,000 if the MSB knows, suspects, or has reason to suspect that the funds are derived from unlawful employment or otherwise illicitly obtained. Let me repeat that figure. $2,000, not $10,000. $2,000. This means if you walk into a Western Union location, you are sending $20,100 to your family in India, Mexico, Pakistan, Philippines, Nigeria, anywhere, and the agent has reason to suspect your income source is questionable. They are legally obligated to file a SAR on you. What gives them reason to suspect? The FinCEN Alert lists specific red flags: frequent transfers in round amounts, transfers that appear inconsistent with the sender's stated occupation, multiple transfers to different recipients in the same region, use of multiple locations to avoid detection, incomplete or inconsistent identification documents. Now, I want you to consider how many of these red flags apply to ordinary law-abiding immigrants who simply send money home each month. You drive Uber, you work construction, you work at a restaurant, and you wire $1,500 to $2,500 every single month. To the algorithm, that appears suspicious. And here is the critical link: that SAR does not just sit in a FinCEN database. It gets shared. Under the USA Patriot Act and subsequent executive orders, SARs can be accessed by over 300 federal, state, and local law enforcement agencies. That includes ICE. That includes Homeland Security investigations. That includes the FBI. Now we arrive at the part that changed everything in 2025. This is the part that turned the IRS, the tax agency, into an immigration enforcement instrument. On April 7, 2025, Treasury Secretary Scott Bessent and DHS Secretary Kristi Noem signed a formal data sharing agreement between the Internal Revenue Service and Immigration and Customs Enforcement. Under this agreement, IC can submit names and addresses of suspected undocumented immigrants to the IRS. The IRS then cross-references those names against its taxpayer database, your W-2s, your 1099s, your tax returns, and sends back confirmation of identity, address information, and employment data. In the first batch alone, ICE submitted 1.28 million names to the IRS. The IRS verified 47,289 of those individuals and sent their information back to ICE. Let me say that again. 47,000 people had their tax records handed over to immigration enforcement. On May 13, 2025, U.S. District Judge Dabney Friedrich denied a request by immigrant advocacy groups to block this data sharing. The court ruled that the shared information does not fall under the IRS privacy protections of Section 6103 of the Internal Revenue Code. Then in February 2026, something even more alarming surfaced. Tax notes reported that the IRS admitted it had erroneously shared taxpayer information beyond what the agreement permitted. They accidentally provided ICE data on people who were not even on the original request list. So let me connect the dots for you. You file your taxes, which the government tells you to do. You report your income, which the government tells you to do. You use an ITIN number because you do not have a social security number. And now that very same tax return can be used to locate you, identify your employer, confirm your address, and hand all of that to ICE for enforcement action. This is not theory. This is happening right now. Court documents confirm it. IRS admissions confirm it. The data pipeline is live. On top of the surveillance, there is now a brand new tax specifically designed to take money from immigrants who send funds abroad. The One Big Beautiful Bill Act, signed into law on July 4, 2025, includes Section 4475, which imposes a 1% excise tax on all remittance transfers sent from the United States to any foreign country. Let me read you the exact language. There is hereby imposed on any remittance transfer a tax equal to 1% of the amount of such transfer. The tax shall be paid by the sender. This tax took effect on January 1, 2026. If you sent money home on January 2, 2026 using cash at a Western Union or MoneyGram location, you already paid this tax. Now, here is the critical exemption. The 1% tax does not apply if your transfer is funded by number 1, a withdrawal from a U.S. bank account, number 2, a U.S.-issued debit card, number 3, a U.S.-issued credit card. The tax only applies to transfers funded with cash, money orders, or cashier checks. Let me share a real-world example. You send $500 in cash to your mother in Mexico every month. Under the new law, $5 per transaction goes to the federal government as excise tax. That is $60 per year. Over 10 years, $600 gone just in tax on your own earned money that you already paid income tax on. But here's the bigger problem. If you do not hold a U.S. bank account, maybe because you do not have proper documentation, maybe because banks have begun closing accounts of immigrants, you are forced to use cash. And if you are forced to use cash, you are forced to pay the tax. And every single one of those cash transactions is also being reported and monitored under the $2,000 SAR threshold I just described. So you are being taxed and surveilled simultaneously. That is the 2026 reality. The numbers are staggering. In 2024, immigrants in America sent over $93 billion in remittances abroad. The Congressional Budget Office estimates this 1% tax will generate nearly $10 billion across the next decade. That is $10 billion pulled directly from immigrant families. There's one more layer most people are unaware of. On March 11, 2025, FinCEN issued a geographic targeting order called a GTO specifically for money service businesses operating near the United States-Mexico border. Under this GTO, MSBs in designated border areas must submit reports for all transactions above a specified lower threshold, significantly below the standard $10,000 CTR requirement. The exact threshold varies by region, but the directive explicitly requires enhanced monitoring of all cross-border remittance activity. This means if you live in Texas, Arizona, New Mexico, or Southern California, and you use a local money transfer agent, your transactions face an even lower reporting bar than the rest of the country. The GTO was issued under the authority of the USA Patriot Act, Section 3111, which permits FinCEN to designate geographic areas of primary money laundering concern. The practical effect is that millions of immigrant families residing near the border face heightened financial surveillance simply because of their zip code. Let me explain the enforcement chain. How a simple money transfer can lead to agents at your door. Step 1. You send money. The MSB submits a SIR or CTR with FinCEN. Step 2. FinCEN's database flags the transaction based on pattern analysis. Multiple SARs from the same individual. High-frequency transfers amounts that suggest income inconsistent with declared employment. Step 3. Under the IRS-ICE data sharing agreement, ICE submits your name to the IRS. The IRS confirms whether you have filed taxes, what income you reported, and what address you used. Step 4. If your reported income does not align with your transfer volume, for example, you reported $22,000 in annual income but sent $45,000 abroad, that discrepancy triggers an investigation referral to Homeland Security Investigations. Step 5. HSI opens a case. They may conduct surveillance, they may visit your home, they may visit your employer, they may subpoena your bank records. This entire chain can start with a single $2,000 Western Union transfer. Not 10,000, 2,000. I do not want to merely scare you. I want to protect you. Here are 5 concrete steps every immigrant sending money home must take right now. Step 1. Use electronic transfers from a U.S. bank account whenever possible. If you have a bank account, use it. Move funds electronically. This avoids the 1% remittance tax entirely and reduces the likelihood of a SAR being submitted because electronic transfers from verified bank accounts carry lower suspicion scores. Step 2. Never structure your transactions. Do not split a $12,000 transfer into 3 $4,000 transactions. Do not use multiple locations on the same day. Do not ask family members to send on your behalf to avoid thresholds. All of this is federal structuring, and it carries 5 years in prison under 31 U.S.C. 5324. Step 3. Maintain records of your income source. If an agent ever questions where your money comes from, you need documentation. Keep pay stubs, bank statements, tax returns, and W-2s or 1099s organized and accessible. If your income is legitimate, documentation is your strongest defense. Step 4. File your taxes properly and on time. I know this sounds counterintuitive given what I told you about the IRS ICE pipeline, but here is the reality. Not filing taxes creates its own set of problems. Penalties, interest, inability to adjust status, inability to prove continuous presence. The key is to file correctly and to recognize that your tax data may be shared. Consult with an immigration-aware tax professional. Step 5. Consider opening a joint bank account with a trusted family member who holds proper documentation. Many banks allow joint accounts. If your family member has a social security number and a U.S. bank account, electronic transfers from that account to your family abroad will not trigger the remittance tax and will carry a lower surveillance risk. Let me put real numbers on this so you grasp the total cost of sending money home in 2026. Scenario 1, undocumented worker, no bank account, sends $2,000 per month in cash through Western Union to Mexico. Monthly cost, $20 in remittance tax, plus Western Union fee of approximately $10 to $15, plus the SAR risk on every single transaction because it exceeds $2,000. Annual cost $240 in tax alone, plus 12 SARs filed on your name per year, plus your pattern flagged in the FinCEN database. Scenario 2. Green card holder with a Chase bank account sends $2,000 per month electronically via Zelle or wire transfer. Monthly cost. 0 remittance tax because it is electronic from a bank account. Minimal SAR risk because verified identity, verified income, verified account. Annual cost possibly $50 to $100 in wire fees, but 0 tax, 0 SAR, 0 FinCEN flags. The gap between these two scenarios is not just money, it is freedom, it is safety, it is whether agents appear at your door or not. I need to address this because I know many of you rely on informal transfer systems. Hawala, Hundi, FinCEN, whatever you call it in your community. Here is the legal reality. Operating as an unlicensed money service business in the United States is a federal offense under 18 U.S.C. 1960. Penalty up to 5 years in prison. If the funds are linked to any other criminal activity, tax evasion, immigration fraud, anything, the penalty climbs to 20 years. In the 2026 National Money Laundering Risk Assessment published by the U.S. Treasury, Hawala networks are specifically identified as a high-risk typology for illicit cross-border transfers. Does this mean every Hawala transaction results in prosecution? No. But it means that if you are already on FinCEN's radar, if SARs have been filed on you, if your name has been through the IRS ICE pipeline, and then you're also caught using informal transfer networks, the legal exposure multiplies dramatically. My advice, stay within the formal financial system. Yes, it costs more. Yes, it is monitored. But being inside the system with proper documentation is far safer than being outside it with none. Let me summarize everything with complete clarity. The $10,000 rule is not the real threat. It never was. The real threat in 2026 is the $2,000 SAR threshold, specifically targeting immigrants. The real threat is the IRS ICE data sharing pipeline that has already exposed 47,000 people. The real threat is the 1% remittance tax that penalizes cash users who are disproportionately undocumented immigrants without bank access. The real threat is the geographic targeting orders that establish surveillance zones along the border. Every single dollar you send home is now tracked, taxed, and potentially shared with immigration enforcement. This is not conspiracy. This is not rumor. I have provided you the statutes. I have provided you the FinCEN Alert document number. I have provided you the court ruling dates. I have provided you the exact dollar thresholds. Protect yourself. Protect your family. Use the 5-step plan I outlined. And share this video with every single person you know who sends money home, because most of them have no clue this system exists. CTA in closing, if this video helped you understand something you did not know before, hit the like button right now. Subscribe to this channel because I cover these issues every single week with forensic detail and original sources. Drop a comment below. Tell me your situation. Are you sending money through Western Union? Are you using cash? Do you have a bank account? I will personally reply and help guide you. Next week, I'm covering the 7 things you must delete from your phone before you land at a U.S. airport. CBP's new electronic device search directive went into effect April 28, 2026, and it affects every single traveler. You do not want to miss that one. Until then, stay informed, stay protected, and I will see you in the next.